Is the partnership model dead in accounting firms? And are the leaders who cling to the partnership model putting their firms, even their careers at risk? That's a controversial statement, but it is being talked about more and more. Business models, firm structures. Welcome to the Accounting Influencers podcast, where we bring you insights you need to lead with authority, to influence change, and build a powerful personal brand in the accounting world. I'm Rob Brown, and today we're tackling this critical issue of transforming the business model in accounting firms. If you're looking to get more of a voice in your firm, build credibility, authority, and have a bigger impact both inside and outside the firm, this is the kind of knowledge you need to have. It's good to be aware of what's happening in the wider world, and even though you might not be in the boardrooms and at partner level, you need to be involved in these conversations and finding out what is going on. So we're going to explore the trends and shifts driving change in accounting firms on this show so you can stay ahead of the curve, position yourself as a strategic leader with executive presence. And one of the most important changes in the accounting profession today is the decline of the traditional partnership model. Most experts agree the partnership model isn't just outdated, it's dead. I'm happy to quote Mark Koziel here, CEO of Lineal. Amazing thinker, wonderful servant to the accounting profession. He spoke at a conference I chaired not too long ago called the International Accounting Forum, which is run by Arena International, and these are the people that produce the International Accounting Bulletin. And Mark was very bold. He got up on stage and said, the partnership model is dead. And one of the reasons the partnership model is dead is that the managing partners role is dead. And one of the reasons why the managing partners model is dead is that partners cannot be managed. So kudos for calling that out, Mark Koziel. And so what we're getting to here is that firms that continue to operate with a partnership model might be setting themselves up for failure. I know firms that work really well with a partnership model, and goodness me, isn't that the way it's worked for millions of years? But if you want more influence or credibility in your firm, you need to understand why this shift is happening. The partnership model, just to be clear, is where individual partners control their own client bases, protect their personal income streams. Is it inherently flawed? Possibly. It's slow. It's resistant to change. The partners have their own agenda that might be focused on short-term individual gain rather than long-term firm success. Are the younger people in the firm bought into a partnership model? Do they want to throw money into an equity pot in the hope of drawing that money out down the line? Do they want to pay for a pension pot of senior partners? All of these things are in the mix. If you want to lead your firm into the future, you need to advocate for a corporate business model led by a CEO with clear governance structure focused on firm-wide goals. Now, that's a bold statement. I'm not asking you here to rock the boat. If you've got a partnership model, it may work very well, but this is where we're heading, and we'll talk about where we're heading this way. I've got an education background. Many of you know that listen to the show that I'm a former high school math teacher. Many years ago in the UK, schools stopped being ran by teachers, head teachers, and they started being ran by business people because you're managing budgets, you're leading people, you're not on the front line of teaching, and the whole business model of schools changed. So the shift I'm talking about here is not just theoretical. More and more firms are embracing a corporate model driven by a CEO, a strategic board. They make faster decisions. Sometimes it's not decision by committee. It's not decision by committee. So they stay more competitive. They're more adaptable to market changes. If your firm isn't already moving in this direction, it's maybe time to ask why not. Is it the inevitable? And whichever direction it's going, to position yourself as the person either pushing for the change or keeping the partnership model on track. So one of the biggest catalysts for this transformation is, not surprisingly, the growing role of private equity in the accounting profession, industry. In the last few years, we've seen more firms partnering with PE. It's not just bringing in capital. These PE firms, they want modernization, they want efficiency, they want to take money out of the firm. So they're investing in technology, they're investing in new service offerings, they're investing in people, and the partnership model, the equity pots, hold that back. So for leaders in accounting firms, that's you, and everybody leads. Even the most introverted person in the world will influence 10,000 people in their lifetime. You've got to understand how PE affects your business model and how it creates opportunities for growth. If you are trying to resist PE and maintain independence, fine. You can still adopt some of the changes that PE advocates to make your firm more competitive. What we do know is that the firms that are embracing PE are using those funds to automate compliance work, integrate AI and data analytics, focus on higher value advisory work. This is all out there. You leading the change in these areas even before PE money comes in will set you apart as a forward-thinking strategic leader. That's what we're trying to do on this podcast. Now, the decline in the partnership model goes hand in hand with another major challenge, which is partners nearing retirement. We've spoken a lot on the Accounting Talent podcast. This is our sister show about the shortages. And even on this show, I've interviewed Sue Coffey and Lexi Kessler, who are on the AICPA Talent Advisory Pipeline Committee, talking about what's going on with the talent pipeline and where the blockages are. We've got partners nearing retirement. 75% of CPAs in the US are at or close to retirement age. We're probably not that far behind in the UK and other countries. And they're focused naturally on maximizing personal compensation and their equity pot to leave with, rather than investing in the firm's future. I'd focus on my own pot. Who wouldn't? And this is one of the biggest challenges to change in many firms. But you're an aspiring leader. You need to advocate for decisions that benefit the entire firm, not just a few individuals. So this is about shifting the mindset from what can I get out of this to what can we achieve as a team, as a firm, as an office. Another disruptor here is technology. So traditional services are being molded and changed. AI and automation rapidly taking over low-level tasks. Audit, tax preparation, these are all in the mix, freeing up time for high-level advisory work. And if you can leverage these tools, not just existing, but emerging advanced technologies, focus on the strategic direction of the firm, you're going to become indispensable. You want to be that champion for the technology. So you're advocating for data analytics, you're advocating for automation, you're not holding back change, and you're willing to make investments. Now, it's harder if that investment comes out of your potential payout, but this is the way it's going. You want to increase your authority, your credibility in the firm by getting ahead of the trends that are already coming. So I want to make this actionable here. And I want to give you some things that you can take away and really think about. And this show is all about building your authority, your influence in your firm. So here's a checklist of 7 essential takeaways that you could focus on to position yourself as a leader with strategic importance in your firm and raise your profile. And this is all about being more aware, more mindful of corporate governance and firm structures. Number 1, champion the shift to a corporate model. You don't have to have been acquired by PE to start to make some changes in this area for adopting a more CEO-led governance structure, being a voice that pushes for this transformation. You'll be seen, hopefully, as someone with strategic vision. Now, you're going to rub some people up the wrong way. You're going to put some people's backs up. Those people with a vested interest in the status quo, they're not going to be on board with it. But there's less people at the top than in the middle and the lower ranks. So you can gain some credibility, a groundswell of advocacy by being at the front of this. Your ability to influence long-term decisions at the top levels of a firm. This gives you credibility, a seat at the decision-making table, even if you're seen as something of not a rabble-rouser or a disruptor or a saboteur, but someone that's forward-thinking, a leader that wants to drive change, modernize things. This makes you indispensable in an accounting firm, and that's what this podcast is all about. Number 2, invest in technology. Be seen as the person that leads the charge on AI and automation and data analytics and things like that. Push for innovative technology. You'll be viewed as the progressive leader. You're thinking about the firm not now or in the next year, but the next 5-10 years. Knowing how to streamline operations, create efficiencies, integrate technologies, not just with the firm, but with other technologies that you've got. It's only going to save time and resources. It will also highlight you as someone of value, as focused on modernization, agility, competitiveness. This is going to enhance your influence and your relevance. Number 3, understand the impact of PE. You've got to be knowledgeable about this stuff. Read what it's doing in other industries. Look at accounting tech. A lot of the big tech providers now are being acquired by private equity. Look at HG Capital. We've got a lot to do with Iris and Caseware, other companies like that. They're private equity controlled, and private equity is a really good thing in these firms. So read what is going on with these companies, not necessarily in accounting, but you want to be seen as knowledgeable. You want to be the expert. You want to be commentating with credibility and authority on what PE is doing in any industries, particularly if your firm's considering PE involvement or is competing with firms backed by private equity. You need to know how that plays into your firm's position in the marketplace and in the talent market. So your insight should elevate your status as a valuable advisor, strategic consultant that understands growth, modernization, knows what's going on with PE. Don't just bury your head in the sand. Read the tea leaves. Recognize how to leverage your partnerships for funding strategic initiatives, bringing in more money. You want to be seen as a strategic leader. Number 4, try and specialize in a niche industry. These are protected and these are growing. Firms that do this are growing faster than generalist firms. So become a subject matter expert in healthcare, not-for-profit, tech, crypto, cyber, cannabis, whatever it is. There are so many emerging industries here. So you're not just contributing to the firm on a general level, you're becoming irreplaceable. You want to be a distinct voice. You want to not necessarily swim against the tide, but you want to be an authority in what's coming up, and you want to be that standout voice. So client relationships, talk about what's going on with new opportunities, strategic discussions. We're enhancing your brand as a go-to expert in your field. So specialize. Pick a few lanes. Doesn't need to be one. You could specialize in a particular offering. You could specialize in a particular market, and that's your go-to. Another tip, number 5, is break down silos. Take the lead in encouraging collaboration across departments. Firms that remain siloed limit their growth potential. They set themselves up for a private equity takeover that just strips out all fat. So get ahead of that. Advocate for a more client-centric approach. Get departments working together more holistically. Cross-selling and upselling to clients by knowing what's going on in different departments. You'll be seen as a team player, a strategic thinker, someone that's focused on not just your own success, but that of the firm as a whole. Got a couple more for you here. Next one here. This is number 6. I'm going to leave you with 6 actually today. Time is pressing on. So number 6 is rethink hiring and talent. Get more involved in that. It's not just filling vacancies. Check out our accounting talent podcast. We've just done a 3-part mini series on strategic hiring. We looked at the when to hire, the who to hire, and the how to hire. And we know that the thought leaders, the more influential people in an accounting firm, they have a handle on talent. They're always thinking strategically about whether work, roles, jobs, projects can be automated, outsourced, or restructured to enhance efficiency. Efficiency is the language now of accounting firms. Efficiency is driving changes in business models and governance and structure. So be seen as someone that's got an innovative approach to hiring, a proactive approach, building your network, building a talent pipeline. Become a go-to resource for this kind of thinking. And this elevates your influence within senior leadership if you're already there, or for them if you aspire to those kind of levels. You want to be seen as a forward-thinking leader who's shaping the future of your firm. So each of these 6 strategies, they won't just make your firm more competitive, but they'll elevate you as a strategic leader. And by staying ahead of these industry shifts, you'll hopefully build the influence, build the authority you need to shape your career and shape the future of the firm. So let's close up here. At the end of the day, being a leader, being someone of influence in the accounting firm, it's not just about managing clients, running teams, billing hours. It's not just about doing the technical stuff. It's about the wider picture, not tactical head down, what's happening in my office, my department, my town, but head up, having a wider perspective, thinking about where the industry is headed, how you can drive change, and thinking about the long-term success of the firm. It's looking at stuff like pressure on compliance fees. What is that doing for the firm? It's looking at CEO-type C-suite models and where the partnership model is flawed. It's getting ahead of that. So you've got an opinion. You've got thoughts on it. You keep ahead of these industry shifts. You anticipate change. you drive innovation, you get ahead of the disruption. That's what we're all about here with the Accounting Influencers podcast. Check out the Accounting Influencers page on LinkedIn. And this is going to be on YouTube as well. We hope you enjoyed this, got some valuable insights. Hit the subscribe button, share this episode with a friend you think might hear it. I'm Rob Brown. I will see you next time on the Accounting Influencers podcast.